Good day everyone. Let us discuss Revenue Regulations number 3-2025 which covers VAT compliance for digital service providers or DSPs. Digital platforms like streaming services, e-marketplaces, and cloud providers have grown significantly. However, while traditional businesses have been paying VAT, many digital platforms, especially foreign ones, were not. RA 12023 introduces VAT on digital services to ensure fair taxation between digital and traditional businesses. Previously, non-resident DSPs were not directly taxed, giving them an advantage over local businesses. This law ensures that all digital services, whether provided by resident or foreign DSPs, are subject to VAT when consumed in the Philippines. This regulation helps level the playing field and increases government revenues. The BIR is responsible for ensuring compliance, and failure to register or remit VAT may result in penalties. Understanding this law is essential for DSPs, businesses, and tax professionals. Who needs to pay value-added tax or VAT? Under RR 3-2025, VAT applies to DSPs supplying digital services in the Philippines. This includes both resident and non-resident providers. Resident DSPs, like local online platforms, must register and comply with the tax code standard VAT rules. Non-resident DSPs, such as foreign streaming services or online marketplaces, must register via the BIR's VAT on Digital Services or VDS portal. The policy does not cover the sale, supply, or delivery of physical goods from a foreign territory to a consumer, user, or buyer in the Philippines, it being an importation of goods subject to customs duties, taxes, such as value-added tax or VAT or excise tax. Additionally, e-marketplaces facilitating digital transactions must ensure VAT compliance. If a digital service is consumed in the Philippines, VAT applies, regardless of whether the provider has a physical presence in the country. What kind of transactions are covered? RR 3-2025 applies to two types of transactions: business-to-business or B2B and business-to-consumer or B2C. B2B transactions involve digital services supplied to businesses, government agencies, and government-owned or controlled corporations or GOCCs. In these cases, VAT-registered businesses can claim input VAT subject to compliance with invoicing and documentation requirements. B2C transactions refer to digital services provided to individuals who are not engaged in business. Since consumers cannot claim input VAT, the VAT paid becomes a final tax cost. Whether a service is provided to a business or a consumer, the determining factor is the location of consumption. If consumed in the Philippines, VAT applies. What is considered a digital service? Digital services include a wide range of online transactions. These include online search engines, social media platforms, and digital marketplaces, cloud storage, web hosting, and IT infrastructure services, online advertising and targeted marketing, subscription-based platforms such as video and music streaming, digital products like ebooks, software, and mobile applications, virtual private networks or VPNs, and AI-driven analytics. These services generate significant revenue, and the new regulations ensure that they contribute fairly to the Philippine tax system. Whether provided by local or foreign DSPs, VAT applies if the service is consumed in the Philippines. How VAT is applied to digital services? VAT on digital services is imposed at 12% of gross sales. The tax is applied based on whether the service is consumed in the Philippines. For non-resident DSPs, the primary factor for VAT liability is the consumer's location. If a customer in the Philippines purchases a digital service, the transaction is subject to VAT regardless of where the DSP is located. This regulation ensures fair tax treatment across industries by aligning digital services with traditional businesses that are already subject to VAT. The law eliminates previous tax advantages enjoyed by foreign DSPs operating without taxation. How do we determine if a consumer is in the Philippines? To determine if a digital service is consumed in the Philippines, the following indicators are considered: credit card or bank account details linked to a Philippine financial institution, billing or home address provided at the time of purchase, cellular phone country code such as +63 for the Philippines, internet protocol or IP address showing access from the country. If two or more non-conflicting indicators confirm that the service is used in the Philippines, VAT applies. This approach ensures that transactions are correctly identified for taxation while preventing tax avoidance by DSPs. Let us talk about VAT registration requirements for DSPs. All DSPs must register with the BIR for VAT compliance. Resident DSPs follow the standard VAT registration process under Section 236 of the Tax Code, while non-resident DSPs must register via the VAT on Digital Services or VDS portal, allowing them to comply with Philippine tax laws without requiring a local presence. Non-resident DSPs are not required to have a local representative but may appoint third-party service providers such as law or accounting firms to assist with compliance. This ensures that foreign DSPs can meet their tax obligations without physical operations in the country. It is also advisable to discuss the invoicing and documentation requirements. To ensure proper VAT compliance, DSPs must issue invoices for every sale. Resident DSPs must comply with Section 113 of the Tax Code following local invoicing standards. Non-resident DSPs must issue invoices with simplified requirements, including transaction details, reference numbers, buyer information, and VAT amounts. If a transaction includes both VAT-exempt and VAT-able services, the invoice must clearly separate them. Proper documentation is crucial for businesses to claim input VAT and for the BIR to track tax compliance effectively. You should also remember the VAT-exempt digital services. Not all digital services are subject to VAT. The following are exempt under Regulation 3-2025. Online courses, webinars, and training provided by DepEd, CHED, or TESDA accredited institutions. Subscription-based services purchased by government educational institutions. Banking and financial services, including BSP-registered virtual asset service providers or VASPs. However, other digital financial transactions remain taxable. This exemption ensures that essential educational and financial services remain accessible while still regulating other taxable digital services. As to enforcement and penalties, take note that non-compliance with VAT regulations has serious consequences. The BIR has the authority to suspend operations of non-compliant, non-resident DSPs, block access to digital services within the Philippines, file criminal and civil charges against businesses that fail to comply. These measures ensure that both local and foreign DSPs follow Philippine tax laws. The BIR is strengthening its enforcement capabilities to prevent tax evasion in the digital economy. Furthermore, failure to comply with VAT regulations results in penalties. Late filing or payment incurs interest, surcharges, and fines. Non-registration may lead to suspension or closure of operations. Tax evasion can result in imprisonment under the BIR's Run After Tax Evaders or RATE program. Businesses must ensure timely compliance to avoid these penalties. Tax professionals play a crucial role in guiding their clients on proper VAT registration, invoicing, and reporting. As a final reminder, the VAT on digital services ensures fair taxation in the digital economy. If you are a DSP, register with the BIR and comply with VAT regulations. If you are a consumer or business, be aware of VAT when purchasing digital services. If you are an accountant or tax professional, advise your clients on their compliance obligations. There are many compliance matters to consider, and it is best to fully understand the requirements outlined in RR 3/2025. For any concerns, consult a tax expert or refer directly to the revenue regulations.